Staying with the consumer, our next guest points out that spending in leisure has experienced rapid growth this year, and the rise of sports betting is one main reason. That growth in betting isn't just impacting spending, it could also have a lasting impact on the housing market. Joining us now is Meredith Whitney, the CEO of Meredith Whitney Advisory Group. It's great to have you back.
Thank you.
And I love this sort of original take on the consumer. So explain, first of all, why you started looking into sports betting.
Well, I always look at consumer data. I mean, the consumer drives everything I look at in terms of housing, in terms of my economic outlook. And monthly, I look at the specific consumer data that I've been looking at for over 20 years. And 2 weeks ago, or a week and a half ago, it said something that I'd never seen before, which I know that retail spending has been down all year. You know, restaurant spending, travel, services, leisure have been the bellwethers. They've been the strong suits. But never before, you think of the Taylor Swift effect, yep. And we all assume that's what was driving growth and spending. But actually, they called out that the fastest growing leisure spend is fantasy sports and online sports betting. So I looked further into that and looked into DraftKings. And what you see is this massive growth. So sports betting has only been legal outside of Nevada for 5 years. So in 5 years, it's gone from one state being legal to 29 plus the District of Columbia. So it's had meteoric growth. So I know everyone talks about NVIDIA and its performance this year. DraftKings has doubled that performance. And you understand why. You have this massive secular wave behind it. So the negative impacts is that it's all young men. And I parallel that with, or dovetail that with Pew Research, which says that 63% of young men are single. And that's the highest it's ever been. And 50% of those young men have no interest in dating, not even casually. And 30% of those men, or 30% of young men, say they have not had sex in over a year and don't seem to care. So the point being,
because they're getting pleasure out of sports betting instead.
Sports betting now through technology is as easy as buying something, ordering a pizza online, or shopping online. And what you see is young men who've grown up with gaming are used to doing everything on their phone, and now they can do all sorts of betting on their phone. You can do real-time parlays on their phone during a game, and it's been explosive. So if you look at the growth in, and so DraftKings says that they've doubled revenue every year, expected to double revenue over the next 3 years, but that's just on the existing states. So the most populous states don't have legalized online sports betting or sports betting, and that's California and Texas. So if those come online, you've got double, triple the type of revenue adjusted EBITDA. So, but what this means for housing then is you have the lowest household formation growth rate in over 60 years. It could be longer, but that's as long as the data has been comprised. And so you have young men who don't want to date and young women who are spending their time really with Instagram moments, going to the Taylor Swift concert. I don't know if you've been to them. It's all filmed about yourself at the Taylor Swift concert. So
they're not getting married and building homes.
They're not getting married. 74% of the housing stock is owned by people over 50. 90% of the housing stock is owned by people over 90. So when these people want to sell, which I believe they will start to sell with a vengeance next year, who are the buyers going to be? And I just think, I think that home builders are smart. They're building a lot of rental properties, but people are not going to be buying into these bigger homes.